Crisis in Hong Kong. New world development faces a decisive test and concerns the global market. Right now, one of the biggest names in the Hong Kong real estate sector may be on the verge of a historic collapse. New world development, a giant in the Asian market, faces a crucial deadline today: the payment of interest on an international bond in dollars. If it fails, the impact could spread like a domino effect, hitting investors, creditors, and confidence in the Asian market. Stay until the end, because in this content we will reveal what this means for the global economy and why the warning signal is on. What is happening? New world development, a traditional Hong Kong developer controlled by the family of tycoon Henry Cheng, needs to pay exactly $5.05 million at the beginning of this week. This amount corresponds to the interest on a bond with a yield of 5.875% issued in dollars. And unlike other company securities, which have clauses allowing the postponement of installments, this security does not allow for delays. If the company fails to fulfill this obligation within 14 days, there is a risk that the market will consider the situation as a technical default. And at such a delicate moment in the global economy, this possibility sets off all the alarm bells. Transition to a broader context. Next, we will understand the size of New World's debt and what it is doing to try to maintain liquidity in an increasingly unstable market. If you haven't liked or shared it yet, now is a good time. Let's continue. The size of the crisis. New World Development's current debt exceeds 210 billion Hong Kong dollars, around 34 billion Singapore dollars. This is the largest debt burden among all the major developers in Hong Kong. Last month, the company put the market on alert by postponing interest payments on 4 perpetual notes. Although legally permitted, this move was interpreted by analysts as a sign that the company is facing pressure on its cash flow. Now, with a title that does not allow for postponements, the scenario is even more sensitive. The expectation is that the company will fulfill its obligation and avoid further damaging its image in the eyes of international creditors. Transition to a reaction strategy. Next, we will show what New World is doing to maintain operations, even with this heavy debt load. In fact, a flash sales strategy has caught the market's attention. Stay with us. The strategy for survival. Despite the crisis, the company is still able to move the market. This weekend, for example, it launched a new real estate development in Hong Kong and sold 138 apartments in a few hours. The tactic? Aggressive price discounts. The intention was clear: to generate immediate liquidity, avoid worsening pressures, and keep the wheel turning. This action shows that the company still has the power to attract, as long as it offers advantageous conditions. But the market knows these solutions work in the short term. The structural issue, high debt, remains unanswered. If you've made it this far, congratulations. You're keeping yourself well informed about one of the most sensitive points in the current Asian economy. The situation at New World Development is more than an isolated case. It serves as a barometer for the real estate sector in Hong Kong and signals possible impacts across the entire regional financial chain. In the next content, we'll delve deeper into the impacts of this crisis on international funds, dollarized assets, and even on the movement of Asian currencies. Stay with us, subscribe, and share this content with those who need to understand the reality behind the numbers.